Hello and welcome to Virtual Investor Conferences. On behalf of Harbor Access Investor Relations, we're very pleased you have joined us for our next live presentation from Visibility Group Technologies Corp. Please note, you can submit questions in the question box to the left of the slides. You can also view the company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I am very pleased to welcome Jay Hutton, co-founder and CEO of Visibility Group Technologies, which trades on the OTCQB venture market under the symbol VSBGF, currently VSBGD, and also on the CSE under the symbol VSBY. Welcome, Jay.
Thank you. And thank you, everybody, for taking the time this morning to hear about our company. Visibility Group Technologies is a computer vision and ad tech analytics company. Don't worry, I'll decode that for you. We are a company that takes video streams from cameras and applies artificial intelligence and machine learning logic to understand what's happening in the scene. This has multiple applications, as you can imagine. I often say that we're in the same category of development that Elon Musk is when he builds his driverless cars. The technology is really computer vision. We apply that, however, into two different distinct marketplaces. So who we are. I'm going to first, before I go through these bullet points, talk to you a little bit about how we apply the technology into two distinct marketplaces. I'm going to first start with an evolutionary statement or a problem statement that affects retail, which is one of the two marketplaces that we address, and we address quite effectively. Retail is turning into maybe the last frontier for advertising. By that I mean, we are understanding, those of us who are exposed to technology in particular, that the internet has become a dominant location for delivering advertising campaigns. It has supplanted newspapers. Where are newspapers today? It has supplanted broadcast TV. Where is broadcast TV today? And it has become the dominant category for advertisers, Coca-Cola, Johnson & Johnson, Procter & Gamble, Unilever, to drive brand narrative or brand messaging directly to consumers. But the store, underappreciated, maybe even undervalued for several decades, is a better location to deliver advertising to a shopper or to an individual because they are a shopper. They're at a place where they can actually take advantage of the messages, contextualize the messages, and potentially act on a brand decision. We call it in retail with the moment of truth, where the magic happens. Not a lot of us know this, but somewhere in the neighborhood of 70 to 90% of us make brand decisions directly at the point of sale. So the hypothesis is, can visibility, among others, deliver a digital impression, a advertising impression at the point of sale and measure the performance of that impression? It's the measurement piece which creates return on investment, which creates brand comfort. We're actually delivering to an audience that is receiving it. That's critically important. And visibility plays a role in measuring the ad exposure. Who has that ad been played to? Demographically speaking, is it a 25-year-old? Is it a 35-year-old? Is it a male? Is it a female? And when we deliver that ad, how long is that person engaged? 10 seconds or 20 seconds or 50 seconds? And when we deliver that advertisement, what's the sentiment? Are they happy, unhappy, sad, angry, confused? These are all metrics that computer vision can measure. Software, of course, artificial intelligence, technology and capability that never existed 10 years ago even, we're now really finding its way into the marketplace. Let me give you some metrics. Boston Consulting Group says this category is a $100 billion business by 2027. And if it grows that fast, you can apply your own level of probability to that number. But if it grows that fast, it will have grown faster than social media itself. So we're talking about a significant inflection in the marketplace, and visibility's role within that marketplace is legitimately a leader. We've done it for 5-6 years now, even when it was not that popular or not that apropos or not that significant in a marketplace. We're an early player. I'm going to talk a little bit about our metrics in that category, but first I'm going to talk about computer vision in the security space. I've just described to you, at least at a high level, what computer vision can do, identifying gender, age, sentiments, dwell time. These are all metrics in retail. But can also do things like identifying license plates, identifying persons of interest, identifying weapons held in the frame. These are all examples of how algorithmic logic, artificial intelligence, can be used to interpret video streams. Why is that relevant in security? Well, we've got all these hundreds of thousands, millions, and tens of millions of CCTV cameras. We've got this one problem. People, human beings, cannot possibly look at all these cameras in a way that it could provide any level of prevention. So the concept is AI logic managing and interpreting the video streams on behalf of an operator and then alerting the operator to something of interest. So that is the power and capability of computer vision. So who are we? Visibility's video targeting intelligence platform. This is the retail application. We improve customer experience, we optimize operations, and we help make better decisions. On the better decision side, it's referring to both retail and security. On the security side, it's meaning providing the operator, the guy or the gal responsible for monitoring all the video feeds from all these thousands of cameras, to inform that person to something anomalous in the frame. So critically important and significant improvement in security capabilities as we deploy more and more and more software logic that assists and augments operators. So what's noteworthy about this company? Well, perhaps the most significant event in the company's history, and will provide more significance as we go forward, is a joint venture we have struck. It's now 2.5 years old with AB InBev in Latin America. AB InBev globally is divided up into 6 zones. We are doing business with the Middle America zone. This is the first deployment. The objective of that is deploying advertising with computer vision in small retail. A lot of people don't know this, but AB InBev owns 10,000 bricks and mortar locations just in Mexico alone, and has outside of that region in the other areas of Middle America, Peru, Colombia, Ecuador, etc., another 40,000 stores. So the objective of this joint venture is within 5 years, and we're in year 2 now, within 5 years to deploy 50,000 locations with our technology. This creates 2 things. One, it creates a software as a service revenue for us, so much a store per month. And secondly, and more importantly, creates a $200 to $300 million at scale media revenue. So we're selling impressions, we're selling placement to Coca-Cola, Pepsi, Bimbo. These are all brands in Latin America. And it is beginning to deliver the kind of results that we expected it would. It had a record month in September, this joint venture did, and it's now manifesting the next benefit, which is where we're now launching in Brazil. Under the ABI, Anheuser-Busch sponsorship, we're now deployed in Brazil. It's in pilot right now. It's been in pilot since August and is expected to be deployed to a significant degree in 2024. The third thing, we're taking this exact same model, which is essentially creating advertising platforms within retail. Again, super valuable retail. Retail's, you could judge a billboard impression on the side of the highway to be worth X. But you take that same brand and you put that brand in a store, and they're worth 5X because it's the place where you buy that which is being promoted to you. So Lulu is the largest grocery in the Middle East, and we're launching a pilot with them probably next month. The contract was signed about 6 weeks ago. We're launching a pilot, and when that pilot achieves the objectives, there's 12 or 13 different key performance indicators. Will then go into production, and there's 200 or so stores within the region. Most importantly for the company, most recently for the company, is an accretive acquisition signed with Shelf 9. Winkle Media, the joint venture in Latin America, taught us a few things. Most importantly, it taught us that we better be in retail owning network. Shelf 9 is a network, 4,500 stores, predominantly retail, not exclusively retail, over 90% retail. These are 4,500 screens, and when you combine a media network with a tech stack company, you've got a lot of economies, a lot of efficiencies, because we do things on the tech side that is taken advantage of by the retail media network. So we're going to do more of that. That's an important acquisition for the company. It actually drives bottom line revenue to us this year. It's accretive. It's got a $20 million, 30-month, 2.5 years, 30-month return to the company $20 million, and the entire acquisition, with the exception of the amount of money, 500,000 or so that was applied at the close. The additional 3.89 million for this acquisition is all based on earnouts. So no performance, no earnout. Really proud of that acquisition, and it's going to represent a lot for us going forward. Next bullet is a significant opportunity we have for our digital cooler technology. I'm not going to talk too much about it, but the idea here is the cooler is become a digital platform, and of course capable of delivering lots of high value media impressions at the point of sale. And we've got a significant backlog or opportunity for us there. Only in the world. It's covered by patents. It is fully transparent, so you can actually see through the glass into the product in the cooler, but also see on the glass. So you can run campaigns on the glass, but also have product within that cooler that can be seen. Largest customer for us in North America at the moment is Coca-Cola or their various bottlers, and we have a significant momentum. You can think about the beer space, the beverage space. You can imagine the value there. And the two others are significant deployments. We're doing one in Europe and one here in North America. We're using our security technology to protect synagogues, schools. This is principally our weapons recognition, a proprietary algorithm that we take camera feeds and we monitor and review the camera feeds in real time, looking for weapons. And the application, tragically, is active shooter and those sorts of things, where we can actually use the technology to create significant security supplement for schools and for other locations where this becomes a critical piece. These are just pictures and examples of our technology in situ, working and deployed. Up in the upper left-hand corner is a deployment in Modelorama, which is in Mexico. You can see the cooler technology. You can see in the lower left-hand, the box identified as number 3, exactly the metrics we're collecting. And we're collecting these metrics by way of camera. For those of you on the phone that understand exactly how internet impressions are bought and sold, you will recognize that, because that's exactly the same way. In box number 4 is the cooler. Box number 5 is some of the object recognition. Computer vision, of course, has this enormous ability to recognize demographics and weapons and the things that we've been talking about, but also has a unique ability to identify objects. I think you could probably understand what some of the approaching use cases for that technology would be. And on the 4 boxes entitled 6, 7, 8, and 9, you see some examples of the artificial intelligence logic used for computer vision in security applications. License plate recognition, facial recognition, what we call line crossing, which is the same way of using computer vision to understand capacity or audience. So the two marketplaces that I've been talking about, one retail, the other security, are engaging in significant inflection at the moment. 18.45% compound growth rate on the retail side, and 13.25% compound growth rate on the public safety and security side. There are people out there that are saying most of the growth in security will be AI based, and that's probably not inaccurate. If you look at how you apply AI technology to existing camera networks, you're deploying a processor platform, and then you're pulling AI logic or video streams into that processor platform to provide some level of contextual awareness. So it's a very easy retrofit to existing networks. So you're going to see a lot of that. The London Underground has somewhere in the neighborhood of 55,000 cameras. They've been deployed since the 70s. So the next iteration for a deployment like that is start to draw those video feeds into AI logic to supplement operators. So pretty logical. Some of the key milestones achieved for the organization, I'm not going to go through all of them, but I guess the most important ones are the kinds of partnerships that we've struck. I've mentioned Anheuser-Busch. That is not only a partnership that is in production and in revenue in Middle America, north of Colombia, south of the Mexico-US border. That's Middle America in ABI speak, Anheuser-Busch speak. And we're, of course, now planting our seed in Brazil. That's in pilot. So very significant relationship and very consequential relationship for little visibility when it comes to working with AB InBev, and more to come as we deploy this same model into other locations around the globe. Quick commentary on that. We've made the cut as it relates to Anheuser-Busch because they believe that this technology will create a potentially billion-dollar business unit as they deploy to multiple zones worldwide. Just in Latin America, Middle America zone, that is projected to be a $300 million revenue line, 250 to 300 million by the time it gets to 50,000 stores. So beyond that, you can do your own math. It's a significant opportunity as we deploy into other regions, and we have their sponsorship in doing so. I guess the other thing I want to point out here really quickly is the Shelf9 acquisition, which I think represents a real departure for us. We're a tech stack company, but frankly, tired of being on the bridge but not at the helm. The Shelf9 acquisition puts us squarely at the helm. We're driving the ship. So if we're going to be accountable, and we're accountable, then we better make sure that we have some level of the authority to drive the ship. And that's what Shelf9 represents, really more than anything else. So 7 projects for growth and catalyst. I mentioned that before, and I'll quickly close off by giving you some reference to projections. These are projections. It's difficult in a public company to nail these down, within a certain degree of error. But we feel that we're now at the point where we're projecting cash flow positivity by the end of the first quarter of next year. And most of what we see, you'll see that in years 24 and 25, we are not expecting to participate aggressively in the hardware or services side. Our story is an ARR story, annual recurring revenue. We generate our revenue both on the media side, which of course supports part of the Shelf9 acquisition, which is all media, and we supplement that with our software as a service revenue. So taken together, combined, we're an annual recurring revenue story. I'm not suggesting that we won't do any services or hardware, but we're not projecting either. Capital structure, this is a little bit time-stamped as of 11/15, but that's our organization at the moment. We've seen a significant rise, but like many small cap companies, we've seen a reduction in value over the last little while, and we believe that some of the things happening inside the company on a day-to-day basis are part of the hypothesis of why our value will grow significantly in the coming months. So as a summary slide, we have disruptive technology. I want to point this out really quickly. We're deployed to just over 2,000 stores in Latin America at the moment, and machine learning and artificial intelligence actually gets better as it gets deployed. We pick up something in the neighborhood of 15 to 20 million data points a month just by exposing to that network. And one of the things I should tell you about computer vision and artificial intelligence, it gets smarter the more data points it has. So my point here is, even though it's a subtle point, it's critical. Anyone that wants to emulate what we've done must traverse that same path that we've traversed. So that means we have, 15, 16, 20 months lead on our nearest competitors, because you can't skip that point. You can't act like that isn't required. So we've got some level of lead. It's now up to us to maintain that lead. We have absolutely the most accurate artificial intelligence modules specifically purpose-built for small retail, which is really where the greatest global growth will be. Global strategic relationships. Some of the things I'm most proud of for our company is we've been able to play with the big boys. And of course, as those big boys are doubling down on us, and by the way, there are more big boys coming into Visibility Camp, some of which will be announced in the next month or so. But we have a significant cachet with us right now in our industry. I mean, there are problems that the company is dealing with respect to the capital markets side, but they're no different than other small cap companies. On the business side, we do have a significant opportunity amongst the customers and partners that we're working with. Ongoing product expansion. This is sort of cryptic, and I apologize for that, but we have a development effort going on, just begun actually, with a large silicon manufacturer, which will expand our product line. And more on that to come. But that's part of our ongoing desire to broaden our base in terms of product and provide more capabilities, computer vision-based capabilities to the marketplaces that we serve. Improving sales growth, you saw on the revenue slide that we're going to be focused more and more on ARR. Realign corporate to add scaling capital. Part of the things we did in 23 is reduce our burn and really fine-tune the organization against the key metrics. And for me, the key metrics are any deal that can generate revenue to the company within 3 months gets priority. Any deal that cannot do that does not get priority. So really just the basic blocking and tackling of operations. I'm going to finish on this slide. I know it's a busy slide. For that, I apologize. But what it does do more than anything is drives home the fact that we've got participation in multiple cash flowing businesses, some of which we have 100% ownership of, like Shelf 9, and some of which we have a modest or a more modest ownership position, like Austin GIS, which quickly is an Intel Capital company. We got an early opportunity to participate, which we did, and that's going to, over time, generate benefit for us. I should mention one other one, which is Visibility Middle East. That's the Lulu deal, which was mentioned on earlier slides. That's a deal that we currently have a consolidated ownership of. It's being finalized right now. It takes a long time in Saudi to build your corporate structure. But as that happens, then we'll have a 51% ownership of that company. So off balance sheet, there are reasons to believe that the value of the organization overall is growing. So that's the presentation. I'll now quickly flip to the questions. Give me one moment to scan them. I don't have anyone scanning them for me. I'll start with this question. Can you discuss your sales channels and each implementation of your solutions customized? I'll do my best. The bulk of our business is done through finding local entities that can represent us capably in the region. An example of that is Retelligent, which is our Mexican partner, that ended up becoming our JV partner in the Anheuser-Busch deal. So that's a partner maturation, which made a lot of sense. Initially, Retelligent, local Mexico City based, was representing our product to the broad marketplace. It then evolved into a joint venture which incorporated Anheuser-Busch. That is not always the model, but that's the kind of thing we're doing. So instead of building a sales force of 400 people that are out there, sowing the seeds, we identify and train capable channels in the region, which gives us reach and scale. Similar to Saudi. In Saudi, we found a local company, multi-billion-dollar Al Jabar Holdings, who have an interest in the retail space and security space, principally the security space. This is Saudi, after all, where there's a lot of development going on in the security space. They brought to us an opportunity to invest. They invested 1.6 million USD, and they have the responsibility of capitalizing the local entity. That's the perfect deal for us, not just because they're capitalizing the local entity, but they're investing in building the capability locally, which is ideal for us. We're doing the same thing with Italy, and we're doing the same thing here in the US with select channels. I will address this question really quickly, because in not doing so would be delinquent on my side. The drop in stock price for the company has been extremely violent since 21. What is the company doing to move the stock price to higher levels? Well, I hopefully I've spelled out the hypothesis in these conversations. I don't think the drop in stock price for us is that atypical for a small cap. We're in a risk-off climate, no doubt about that from a macro perspective. But my job is to keep my eyes on the prize and keep moving this company forward. I believe that our company's exit value is 1 billion plus within 3 to 5 years. We're in a marketplace that is inflecting, and we are a leader in that marketplace. We have significant global partners. We have global reach. We're active now in 7 countries, and ABI is taking us into more countries. I mean, if it were nothing but the ABI relationship, I would say we have significant value on that and that alone. What does your growth profile in your security vertical look like? I get questions from time to time from retail and institutional investors asking me which of the 2 categories of market verticals am I most excited about. And my answer varies, actually, because in some weeks I'm really excited about retail, and other weeks we get super excited about security. I will say to you that in the next 3 to 4 months, probably the two biggest deals the company will do will be in the security space. They take forever because usually they're done with sovereign governments, and sovereign governments, of those of you that have been exposed to this, move, not all of them, but certainly the ones we've dealt with so far, move at their own pace, which is not that fast. We have a very differentiated market model along with our partners radar app, where we're deployed at 15,000 cameras in Mexico City at the moment, taking AI logic and delivering that to mobile phones to citizens. Really unique model and unequaled globally, which is basically giving the citizens the ability to manage and understand their own neighborhood security on a mobile phone. So this is security impacting social media. So now it's a ground up initiative as opposed to top down initiative. The negative responses most people have when it comes to facial recognition and all the things that are about the new wave of security is this whole notion of Big Brother forcing it into the population. But the population themselves can adopt this technology and deploy it themselves to enormous effect. In Mexico, that has been a 45% reduction in violent crime. Taking Benito Juarez as an example, one county within Mexico City, from the highest crime county to the lowest crime county in 18 months. So we are proud to play a role in that. Certainly, as time goes by, our unique approach to security, which is not just doing the algorithmic logic on existing cameras, but this whole meshing with social media that we've done with Intel and with radar app local to Mexico, creates a brand new value proposition that I think at the moment is unequaled. What are the drivers of big leap in revenue in 23, 24? Excellent question. Mostly the fact that we're recognizing media as a significant inflection. Again, what is that? We are, up until the Shelf 9 acquisition, and with the exception of our participation in the joint venture with AB InBev, we are exclusively a software as a service company that sells licenses to enable retail or security. The Shelf 9 acquisition, and to a lesser extent the joint venture with ABI, puts us in the media game. Let me explain both of those. As our joint venture, Winkle Media, generates revenue and goes profitable, most of that profit comes from, in fact, Winkle Media's all of the profit comes from the sale and delivery of media impressions to big brands, Coca-Cola, PepsiCo, Unilever, etc. We get 33% of that because we're a 33% owner in the joint venture. So that's been our exposure to media. We got so excited about it and saw the opportunities of it. Media is a 85% gross margin business, that we took that knowledge to acquire Shelf 9. The difference between the joint venture and Shelf 9 is the joint venture is 33%. We get dividend revenue. We get a piece of that revenue. We don't have a consolidated balance sheet. Shelf 9, we have 100% of the entity. They have 4,500 screens, more than twice what Winkle Media has. And we are now the entire piece. We're the tech stack, enabling technologies, and we're the media company. You could call this a pivot. I prefer to call it a refinement. We're on the bridge. We've always been on the bridge. We're now at the helm. How will you compete with the coming competition from the big guys? And do you have any IP protections? We've been granted so far a single patent which is connected to using environmental data, male, female, happy, unhappy, to drive content. The best example I can give of the application of that intellectual property is Minority Report. We all remember that. I was maybe 10 years ago, that movie. The idea is we take environmental data, a woman, a man, a person by identity, and we play custom content driven to that person. That's a patent that is protected, and we've been granted a patent by the USPTO. We have other patents that are in the process, and I can't comment about their probability at the moment, but I'm a software guy my entire career. the most significant protection you can secure as an organization is speed. As long as we're fast, we will continue to take advantage of this marketplace and continue to be a leader. I'm just noticing I'm 4 seconds over, so I have to take this opportunity to thank you all. I apologize for the questions I didn't get to, but I appreciate the interest and I look forward to doing this again. Thank you.